Yeah, the litmus test this morning or this week rather for the markets.
So Aisha, it's a big week. I mean, look at this budget, and you and me have tracked. All three of us have tracked a couple of budgets in our life, and this time around there is just no pre-budget talk, no LTCG, no mention of what the fiscal deficit number could look like. Just no mention of what really could be the political bazooka the finance minister could really fire to ensure that the rural part and the geopolitical and the political, economic and the political part is being taken care of. So it's a very subdued pre-budget setup for the market. That also means that expectations are not there. So if this is a no harm budget, if there is a decent allocation to the capital expenditure, if there is no tinkering in terms of taxes, if there is no big bang welfare scheme, then because expectations are low and looking at the setup in terms of where the market are, I will not be surprised that we could be in for a post-budget rally. I mean, the budget is on 1st of Feb and we are on 29th of Feb and no 29th of Jan, and there is just no narrative. Nobody is mentioning the word budget.
I think everyone's this time just talking about how it's a vote on account, which is why there's no big bang expectations. But yeah, being in the newsroom right here, I don't think we're feeling that pre-budget excitement at all, right?
Okay, yes, it's a pre-budget. This is vote on account, but ahead of budget also, pre-budget also, there is a sense of budget talking point. Yeah. There is a sense of budget cover. There is a sense of what you should expect in terms of the vision statement, the Amrit Kal ka budget. There is just no budget pre-budget talk. Since there is no buzz or no pre-budget talk, my limited point is that if this is no harm budget, if markets like everything, if the budget is again taking all the boxes, then we could be in for a post-budget rally. And we'll talk about technicals, but I think that's one thought which in a sense could really, I would like to just seed this thought for next couple of days in terms of a market mood point.
Okay, yes indeed, there isn't too much further, and it's interesting as well just mapping out how in the last 5 budgets, that's the data on your screen, the markets have moved up in a run-up to the budget as well as on the next day and a week post. But that aside, let's also take stock of what happened while we were away. A truncated week, as we said. You had the global markets, which managed to gain traction, albeit for the Nasdaq, it was a pretty quiet week. You had the dollar index as well, which was at about 103. Brent crude settling at about $82 a barrel. And overnight, you had the indices ending pretty mixed. This morning, waking up to cues where you've got pretty much the Asian markets looking mixed. So just going by what the overnight cues are, Nikunj, not too much to take away.
I think you need to monitor crude now. It's certainly up by about 5% from the recent low. So if you take that crude aspect in, well, then that's the monitorable. Second is that foreign institutional investors who were supposed to be big buyers in January 2024, they've been net sellers. And the data point for the month of Jan clearly seems to be indicating that we've had they've not been on a selling stampede per se, but surely they're in a mood to book profits at a time when globally things are looking okay. So global cues are not that bad, but purely in terms of allocation, foreign institutional investors are just not chipping in. But I see the following in terms of the setup, which is that we've seen a sizable correction in individual stocks. Markets have already, or stocks have already reacted to news, whether it was HDFC Bank or Reliance or perhaps some companies where numbers have not been great. So the market is no longer looking that lofty or frothy. We are starting a new series and no stocks are there in F&O band. So while the real, I won't use the word hallmark, but if you really look at the defining trend has been that we've seen exaggerated reaction on the upside, exaggerated reaction on the downside, and as a result now markets are not exactly that frothy what we thought. So this week could be a stable week. Global cues are looking okay. There would definitely be an element of, we're starting a Feb series, there would be definitely a new element of that, and see both in terms of levels and in terms of direction at lower level, given where the global setup is, I will not be surprised that you get a leg of support.
Yeah, absolutely. Given how, the FI long positioning was start of January to start of Feb, lots has changed because, just look at the stats there. Start of Jan, the FI long in index futures was at a hefty 69.5%. Start of February, this week itself, it's at a bare minimum 22%, also indicating, Nikunj, that any positive from now to earnings or any other announcement also gives you that much scope for short covering, right?
Yeah, that's the case. Aisha, look, in the month of November, December, this market just got everything right. From the outcome of state election to the turn what US Fed could do to great comeback by foreign institutional investors. Frankly, when we started the month of Jan, expectations were high, and expectations given where the market move has been, how the prices have moved, I would say that there is a shakeout which actually has happened, and this shakeout in a sense is giving great entry points to a lot of participants. I would also like to point out that if I look at the aggregate earnings picture, the aggregate earnings are not bad at all, which is that you directionally still have a double digit growth. So for the third quarter on the trot now, the earnings are expanding, and wherever there were excesses in the market, those excesses are getting beaten out. So I would make a case for a bounce. I would make a case for a shallow bounce, but I would definitely make a case that for next couple of days you need to be more bullish than bearish. At beginning of Jan we had turned slightly cautious, but for the near term, when I say near term, next couple of days, be more bullish than bearish.
Okay, that's a stance that you need to adopt. And taking a look at the hectic calendar, apart from, of course, the budget that we'll be monitoring very closely, there's going to be a whole host of big bang earnings: ITC, Bajaj Finance, NTPC, Sun Pharma, Titan, Tata Motors, UPL. And in terms of the overall Nifty weightage as well, Nikunj, it's a total of 21.2% in terms of the weightage that will be delivering their quarterly numbers. What will you be looking at closely?
I think ITC and Bajaj Finance. The reason why ITC I would watch out for, because that's one stock where in a sense you've got a real change in terms of market mood and market momentum. Given that we already have heard from HDFC Bank, this time around expectations from Bajaj Finance are reasonably high. What they reported in terms of their quarterly update also did have impact on those stock now. So half the picture is already out, which is that you know that directionally which way the growth is there. If they are able to fend their margins, if they are able to really convince the market that look, we don't have problems in terms of getting fresh deposits also, then I will not be surprised that disproportionate amount of money actually will move from HDFC Bank to Bajaj Finance in the near term, because growth and liability, growth and deposits, if they both are taken care of, then I don't think there is a problem. The joker in the pack, of course, is Tata Motors. Not that expectations are very high from this time's number, because markets by and large know that how the dispatch numbers and things are moving. But Tata Motor number also would be an indication of what essentially is happening in the EV universe, because that's one space where Tata Motor has surprised everybody. Look, JLR everybody knows, CV everybody knows, Tata Motor DVR is a done deal, operating leverage has kicked in. So now it is really an update on the EV business, which in a sense in the near term could be important. Frankly, from Adani Group of companies, expectations are not very specific per se. But the other one which I think I would like to mention, it would be, because you heard already from ACC, I think Ambuja numbers now would be important. Let's look at ACC intraday graph. I think it was up 8 or 9% on Thursday. There you go. So Ambuja numbers are also this week. So after ACC, which is part of the same group and the same company, then Ambuja numbers are important.